Dollar Tree is exploring a sale of its Family Dollar brand. We were just talking about this yesterday. Good morning, and good morning. This is Jamie Urban. Today is June 5th, Wednesday. Dow Futures is up 0.29%. S&P Futures up 0.42%. NASDAQ Futures up 0.71%. And apparently, stock futures rise as NVIDIA shares gain. Investors look for rate cuts. Europe was all green, last reported. Asia was mixed. ASX 200, which is Australia, was up 0.41%. The Nikkei was down the most, 0.89%. Kospi was up 1%. HSI was down 0.10%, and Shanghai was down 0.83%. A little bit of everything going on. Russell 2K last reported down 1.25%, and the VIX is down 2.43%. Should be some interesting things happening. We're going to look at Forex Factory. 8:15, the U.S. ADP non-farm employment change. 9:40, that's a red folder. That was a red folder. 9:45, USD, the US dollar. The final services PMI, orange folder. 10 o'clock, ISM services PMI, red folder. And then 10:30, we have the crude oil inventories, which is yellow folder. You also had a series of things going on for investing.com. You know, they are always more detailed. We got that started at 7 o'clock. We had a bunch of one-star events with them, which was the NBA 30-year mortgage rate, the mortgage applications week over week, the purchase index, the market index, and the refinance index. 8:15, 3 stars, ADP non-farm employment change for May. 9:45, S&P Global Composite PMI for May. That's a 2-star event, along with the S&P Global Services PMI. That's 3-star event. All right. Let's see here. So we got S&P Global Services PMI for May. The Dallas Fed PCI for April, 1-star at 10 o'clock. Also, the ISM non-manufacturing business activity for May, 1-star. 2 stars, the ISM non-manufacturing employment for May. 1-star, ISM non-manufacturing new orders for May. 3 stars for the ISM non-manufacturing PMI for May. And also for the non-manufacturing prices for May. This is still 10 o'clock. This last one is total vehicle sales, 1-star. The crude oil inventories is 3 stars, which it was a yellow folder on the other site. 10:30 is also 1-star. EIA refinery crude runs week over week. The crude oil imports, both of those are 1-star. The Cushing crude oil inventories is 2 stars. Distillate fuel production, EIA weekly distillate stocks. Gasoline production, heating oil stockpiles, and the EIA weekly refinery utilization rates week over week, all 1 stars, as well as the gasoline inventories, also 1 star. So right at the beginning of opening bell, we got some things kicking off like crazy, right? For Mancini, yesterday's patience paid in SPX after holding 52, 55 to 58 support. I posted at 1 p.m. yesterday. A big move is close. My targets were 52.92, which was hit. 53.01, which was hit. 53.12 was hit. Keep riding runners now until it ends. Plan today, 53.18, 53.30 next if SPX wants it. 52.97, 99 support. Dip below. So you know what that means. 52.97 to 99. So let's switch over to SPX and do some adjusting. So what we got right now, bell just rang, gapped up. So we're going to mark that. And this will be, just going to switch these colors so we can mark where it gapped up for this morning. More than likely, it's going to start pushing through this gap, but when I at least get the get it marked for our 15-minute breakout. So we'll set it to about right there. Just let it do is pushing through. We're on the 15-minute chart. I am on Thinkorswim. 52.97 through 99. So what we'll do is we'll make this 52.97. Go it that way. Oops. We'll add this in 52.97. What? All right. Usually I like to put Mancini on there, but okay, linchpin is fine. Show the name on the right. So this is the number Mancini has. Really 52.97 through 99. I just put the lower number. But I will say, it just happens to be on a price point where price turned around before. All right. So when it gapped up past this most recent high and on the 15-minute chart and the previous high on the 15-minute chart. Right. So this could very well be support when it comes back around. So I'll be looking to see this zone anyway, to see what happens. And if it goes through there, I was look to see if it stops here at 52.92 and 52.83. I'll be looking at those two areas as support as well. Then heading up, just to see where it could go. I'm going to drag this over here and widen it a little bit so y'all can see. You got a couple different levels. This is the top of the gap that we just created or just put a line on there for. So I would be looking at up here. Matter of fact, let me do it this way. This would be better. So this is where this turned around before, above where we are currently. So I'm just going to mark a couple of those. Just get an idea of where it could turn around while it's moving. Oh, just happens to be where it did gap up to. Okay. And then we'll do another one right here. And these dashes, these blue dashes, are just simply where price turned around before in the past. So I'm just marking those just to see what the resistance is over the next, 10, 20, 30 points, just in that range, but not enough where it needs to be a whole bunch of lines on there, anything like that. Just to get an idea. All right. Good morning, Nori, Marsha, Lady T, and Janae. Good morning. As usual, if you have any tickers, hey, Tamar. Good morning, Tamar. If you all have any tickers you want looked at, please feel free to drop those tickers. This is what happened yesterday. I should have probably looked at his first. Yesterday was wild because when it opened, okay, so when it came down, I don't know how many people thought it was gonna be a down day, but I will say I was not expecting it to end up going up here and doing all this business up here. But once it bounced off this 52.82, I figured that was it. At least for a while, which it was. I mean, it did stay under for the majority of the day, but 215, that's when it got the clowning, which is not a surprise to most of us who have traded SPX In the afternoon is about when we expect something to start going crazy. So, good morning, Teresa B. All right, let's take a look at earnings. So, this morning, Dollar Tree, they reported Ollie's Good Stuff Cheap, Unfi, Hibbit, Hibbit, to hip, hopper, to hop, you don't stop. Land's End, Campbell's, Thor. It's like, do you? Is that what that is? Global Blue and Rev Vehicles for Life reported before the open. After close today, Lululemon, ChargePoint, Victoria's Secret, Five Below, Grafe, Simtech, Sprinkler, Couchbase, Smartsheet, and Renew Power. I will say Dollar Tree, which is what I was reading right at the beginning of our stream. Dollar Tree is talking about selling some of the stores, the Family Dollar, exploring a sale of its Family Dollar brand. So we were talking about this within the past 24 hours. So, man, if you trade Dollar Tree, which Dollar Tree is on some of our lists, watch lists and things of that nature. So yeah, that's something to pay attention to for us. This is wanted to get us on the actual numbers for. I'm gonna do a filter on this, and we're just gonna do none United States. Apply filter. This is today. So the ADP non-farm employment change was not great for the economy. This is the actual numbers for the red folder. This was the 815 red folder. So this number 152K on this filter, it did not show the what projected was, but we do know based on this number wasn't all that great of a result. So I know that mainly because it's red. Usually if it's neutral, it'll be black, and if it's great for the economy, it'll be green. So that number was not a positive. So we got on that one. Wow. So I have one request for now. I'm going to bring this line down for SPX on its way to filling the first 15 minutes. Switch this to now. Good morning. This is Lean. All right. Now we'll switch this to. I'll start looking at weekly first. See what's going on. I know one thing. This has some. So I am making a just putting. This is where it turned around before, so I'm just marking where it's turned around before on the weekly. So this would technically be a potential upcoming support area. So that's why I'm putting that line there. But this is a I'll just call it a very interesting seller zone for the weekly chart. I don't even know what the best alignment is for this. Small leg in, base leg out, ugly leg in, two in the base leg out, something like that. Who knows? Good morning, Ray Vargas. On the daily chart, I like this a little bit better. I'm going to mark this gap first. It's trying to fill this gap right now. So I'm going to mark this gap first. And I always try to mark the gaps as soon as I see them, just because for me, it always makes the rest of the chart a little bit clearer in terms of zones. We'll make this one like this. So we got two gaps in this vicinity. And this would be, all right, so we got one up here, one down here. And the reason why I made this one a dashed line is just because it has been support and or resistance in the past. So on my chart, I usually try to mark those so I'll know whether or not it's a what I was told it was called a parity line when it's become support and resistance. So I'm marking that. So what we got here, looks like this is a retrace. Price came down here on the daily chart, hit this point down here. As a matter of fact, since this is the daily chart, I'm going to put this down here. We're going to go back and see where it probably has turned around before in the past. Let's see. Oh, there was a gap back here. 11/14/23. Back in November of 23, there was a gap up. And I'm checking to see. So here it is again. Here, price has gone through support and resistance on this around the same time frame a year prior, actually. This is November of 2021. All right. I don't know how far back that goes in terms of the price getting up that high, but that's interesting that it would be around that twice in a row. But for this, what I'll be looking at is leg in, two in the base, leg out. That's how I would do that. Because this would be a weak leg in. If you don't do formations and you do zones, I would still have it down here at the bottom, acknowledging all three of these. There's buyers down here. That's all. That's the main thing that's important, is that there's buyers down here. So I'll be looking down there for that. Again, these lines are marking the gaps. So the buyer zone will look something like that. Leg in, two in the base, leg out. This one is currently doing its thing. And depending on how you wanted to chart this, some people would do a leg in, three in the base right here, and a leg out for a cheer formation. This would be a strong cheer formation since it gapped down. Means sellers pushed price down. So there are still some sellers here. So I would expect this, because this was so strong being pushed down, I would expect this to bounce off there a couple days, maybe 1 or 2 days. I don't know how now moves, but that'll be my expectation. So if I was thinking about getting in this, I would want to make sure that I was definitely above 695. Since this is pushing down, I would be looking at 7. Okay, I'll see what y'all doing. I'll be about 700. If I want to be technical about it, you can do 705. Where am I getting that number? You take 682 and add 21, which is the volatility. That's 703. Want to be outside of 703. Well, in this case, it will be 705. However, this is 83% out of the money because we're sellers. 82% out of the money would be all right. And I know some of us will do 78% out of the money because it's closer to 80. For our purposes right here, this is a 2.5 spread, about 45 cents in premiums. That is a nice chunk out of the money. And since price is dropping, probably want to try to get in there while it's dropping. All right. So that's where I'll be going for that if I was getting in 705-ish. But this is, again, this gap is here, actually. And remember that these are not rigid lines. These are zones, right? But this looks to me like a retrace and is bouncing off this. If you use Fibonacci, I don't even, that's not a 50% retrace yet. I don't think. Could be wrong on that, but let me see. 38%. There's 23% and 38% in there. Y'all probably can't see. I got to change those colors in there, but it hasn't retraced to 50% or anything. So it's still young in the game in terms of it retracing. But that's what I have for now. Good morning, Lisa Henry. All right. In this case, technically speaking, there's probably people who would go for a put credit spread here because they have a cushion of sorts. I would be too chicken to do it, or had some bad experiences. Let me just say it that way. But if you want to do 657, I probably would do 657. So that's about 25 cents. So that'll be 10% of the collateral. This is a 2.5 spread, $250 collateral. So 10% of that. I wouldn't have an issue with that at all. All right. I don't know what strikes were being used for this on the suggestion, but that's what I am seeing for this. And what I like about this is that even on a 4-hour chart, so I'll be seeing this as because you can do is a cheer formation, leg in. It's a funny looking that's an interesting spot for that to end up being, but normally it would be leg in, 2 in the base, leg out. But the general formation would be a cheer formation. But I'm noticing that it's even on the 4-hour, it's respecting this gap down. So that's what I'll be looking at as well. I see PayPal. Let's see what PayPal looking at. If you are in these, feel free to share what strikes you are looking at or considering. So we have a reference point for the PayPal, man. This is what they looking like over. I mean, they hit a peak in 21, July and August, and it has, I don't know what happened to these jokers. This is the weekly, and really lately, I mean, even though the overall trend is down, lately, since you could even say I would even put this in here and say since, what was that, July of 23? Last July has kind of just been mostly trending to the side. What I've seen here for the weekly is the formation here. This is, to me, it feels more like choppiness more than anything else. But for a seller zone on the weekly, I see this here. Leg in, base, leg out. And then I'll be looking probably here. Leg in, two in the base, leg out. Or because it starts looking kind of weird after a second, I probably would do that one. Yeah, because trying to use this as a leg out doesn't make any sense in this formation. So, but just to have a reference point, 59 is about where I'll be looking on the weekly. And here we are. So we got gaps going on here. All right. I'm gonna mark those. 1, 2. Forgot to make that line. All right, so we're gonna mark this gap. It actually has, price has pushed back down into this. So I would mark, and this should be down here, because this is where it closed down here. And it gapped up and went here. So that's what I would be marking as the gap. But in terms of our traditional leg in, base, leg out, I'll be putting it right here. Because leg in, one in the base, and it actually gapped up and went out. So there are some buyers sitting in here. And for those of you who are familiar with this setup, this is not a revisit because it is right next to this leg out. But if there's any more that comes down and touches this line, there will be revisits. And this is what I got for this. The way I'm doing this is leg in, 3 in the base, leg out. Because that's the first thing that I see. I know that there are some people who would do it this way and go leg in, 1 in the base, leg out. I don't like that leg out as much as I like this leg out. So that's one of the main reasons I will go with this setup. But regardless, this candle right here is a nearby candle, and I would want to include this in the zone regardless, because this is basically part of this zone. So either way, I would still want to raise this up and include that one in there. But this is what I will be looking at. This is dropping right now, current price. I will be looking at definitely above 64, that's for sure. There's plenty of sellers in here. So I would be looking at 64 points. So I'll say probably 65. That's 85%. Probably not going to be a lot of premiums if we're going for this coming Friday, but we'll see. So this is a 1 spread. That's $100 collateral. We can increase the premiums to 10. Cent will be $10. And that's for this Friday. Expiration. That's how I look at that. Again, this is another one of those where it is coming down here. Some people would look to find something under here, under 61. So here's 61. It's 87% out of the money. The premiums are not that great for this coming Friday expiration, but obviously you can always increase that amount, and if it gets down there, it may pick up. But as of right now, I'll be up above this, waiting to see what happens. Depending on how this moves, since I don't trade PayPal, I have no idea, but it wouldn't surprise me if this trade would even be close to being ready today to close out, depending on how PayPal moves. Some of the tech stocks, I do notice that when you get into them, it doesn't always take a long time for them to get closer to getting out. So it may not reach the full percentage that you want for your take profit, but let's say if your take profit is 60%, sometimes you may even see it at 55, 50 before your expiration date. I usually just get out as soon as I see enough. Do not need the trade turning around on me, so I will bounce. This is SPX. So just as a reminder, we added these lines to see what would be the next resistance heading up and heading down. This red line is Mancini number. This gapped up, and that's what this line right here is. All right. Since we know that it went through this number, what I'm going to do, is use this line to mark where our 15-minute breakout is. It just so happens that when it did it this time, when it made this move, the move was made around strong lines. So for people who trade the breakout, the 15-minute breakout, we do have a breakout of the first 15 minutes. However, the sellers are pushing it down, or at least trying to, and the buyers are not having it. Short version of the story. So this wick is telling me that the buyers are trying to push this back up. So if you're trading the breakout, it has broken out, but it hasn't made a definitive move. So that would be something to continue to watch. And a lot of times, especially over the past couple weeks, I've noticed that it'll do the 15 minutes. Sometimes it'll come like outside, but it'll have a strong candle. But then it'll retreat and go back the other way. Kind of like we saw on the chart earlier with SPX, where it'll dip down, hit a point, bounce back up, and you'll be thinking that it's going down and it's only temporary. So that is something to definitely watch. I usually try to give it to 10:15, 10:30 before I really start taking it seriously. But as of right now, we have a tiny bit of a breakout. EMPH. Oh, I haven't looked at this in a minute. Okay. So in phase, overall on the downtrend, even on the weekly, but it has been pretty much basing since August of 2023. So there's a strong seller zone up here. This is a seller zone that looks like it's trying to break past. Right here. Technically, you could say this one right here too, but so you got a zone that is definitely trying to break up against or push up against. And then you have a buyer zone down here It's a pretty strong buyer zone too. Nice leg in and leg out. All right. It's more than enough going on here. Okay. So this is on the daily chart, and I'm just going to put this right here. It has been revisited. But this is the first buyer zone that I see, so I want to make sure I put that in there. Leg in, base, leg out. Very small. The only reason, as a matter of fact, the only reason why I'm going to put this as dashes, only reason why is on here, whenever I have those dashes, I use to remind myself that something is happening. Here's the thing about this formation. The length, the price action here on this candle is so long that it's hard for me to consider this a base candle, because the wick on here, the price action on here makes it, I mean, almost not exactly as long as this one, but almost. So with our base candles, normally when we do like leg in, the base candles we want usually to be smaller, like these, smaller candles signifying. Even this one is even okay in this situation. I guess this one would be too because of where it's located. There's a definite turnaround. This just reminds me of a little bit more choppiness. But if somebody wanted to chart it as a base candle, that's fine. That's fine. But I would be more inclined to be down here. There's a couple different things that could be used or marked. But the important thing, I always say the important thing is making sure we understand where the buyers and the sellers are sitting in these situations. So I'll be just fine. Some people would do this, leg in, tune the base, leg out. And some people would do this, smaller leg in, one in the base, leg out. The only difference between these two really is less risk by having it down here. That's really the main thing. Then up here, I will be seeing leg in, base, leg out. I'll be looking to get in above 135 because that's where this is sitting. So I want to be above this. The buyers and the sellers right now are duking it out, trying to figure out what they want to do. And I know that because for two reasons. First reason is the body of this candle isn't is small, right? So that's number one. But also because it has been basing to the side since May, end of May. So this has been trending. I said basing to the side, but trending sideways since May. So there hasn't been a real firm decision, even over the past week and some change. This line was put here to be the top of this formation. It just so happens that it also landed right here, which is the next formation that I was going to be looking at. So that'll be the next seller zone up, is what I was looking for. Yep. But either way, I will still be making sure I'm above Definitely be in at 130, probably one above 137. Let's see what we're looking at. Because it's pushing up right now and going back and forth, there may or may not be some decent premiums. We'll see. 139. It's telling me about 140. So this is a one spread. That's 10% because price keeps pushing back up. That's why that premium keeps changing. So I would just do 13 cent and wait for it to accept. Since price keeps pushing, like I said, the buyers are fighting. Buyers and sellers are fighting. So when the price gets closer to the strike, premiums go up a little bit. So that's what's happening there. So that may or may not accept, but this is the seller zone. This is the buyer zone. This is the something's happening. Something happening zone right there. But I personally would be going above to get in. But right now, if you want to go below there, I will be looking at, and literally you can just do 131.4 if you want to, minus 8.6. So that's the current price. 8.6 is volatility, implied volatility. Did that wrong. 131.3 minus 8.6. Sometimes I'll just round it up, but so we want to be below 122.7, which would be 122. So according to this, out the money, you got three choices out the money. The actual number is going to determine what your premiums are. In this case, 8 cents for, so that'll be $8 for $100 collateral. If you want to do that, again, you could always increase it to get the collateral that you want. Or you can always move closer, depending on how bold you are and how much you trust your chart. So this is 16. This is 16 cent, 17 cent, 18 cent. This is changing because price is pushing down, getting closer to this strike. So this number would go up. So if you feel comfortable enough getting in down in here somewhere, again, something's happening right here because you got buyers in here. So this is 124, 125. I know more than enough people that will get in there. There's a zone that is there. So if you were doing the iron condor and tried to get into both of those, that would take advantage of both sides. So that's one way of doing it as well. I can't give you investment advice. I'm just letting you know what I'm seeing on the chart. And here we go. So this is SPX. We're looking at the 15-minute breakout again. It has pushed out with a little bit of force. Okay. But as we said earlier, we was waiting to see what was going to happen around this time frame or around this price, because this is acting as support right now. This price point is acting as support. So the question is, what's going to happen here? Whether or not it's going to continue down through here, or if it's going to bounce off of here and then reverse. So that'll be something to watch. I'm more than sure that there are people who trade the breakout who probably got in as soon as it broke out from this line to begin with. Nothing wrong with that. I'm just saying everybody trades this 15-minute breakout differently, but As of right now, the way it has broken out and pushed past this gap up, there could be a freight train, or it could be a, hey man, we gonna bounce off of here and reverse, because we've seen it do all of that at different times. All right. So you did NPH. And let's see here. All right. Waiting to see what ENPH does. So we did now, PayPal, Enphase, SPX, and the only one that's left is alrighty. Let's do it. So this is Russell 2000, small caps. This was actually a strong seller formation right here for the weekly. Leg in, tuna base, leg out. Looks like we got into Enphase. Even though I don't like this leg in, the formation is in the seller zone, and this is a buyer zone formation right here. This zone on top of a zone is what that looks like. And this looks like it may be trying to form a double top pattern, maybe. That's what that looks like. Could be happening. This might come down and break at 1943, or it could bounce and keep heading up. There is a gap right here. Let's mark this. We have our start with the chart. I believe we're calling it a challenge. You can go to educator2trader.com. Is this week. Last night was night number 2. Not too late to join. To start with the chart. Stream is free, but the VIP, which is the in-depth right after that, I think she even referred to it as a chart party. That is the extra details and question and answering session, etc. You can sign up. You can still sign up for that and get the if you pay for the VIP, you can still get access to the call, things of that nature. So you can sign up on Educator to Trader, educator2trader.com. This middle candle is an example of the ones I don't like. You see how this is a leg in and then such a huge wick, and then this is the out leg. That is, I don't like that type of formation. I shouldn't say I don't like it, but it's incongruent to what I like to see as a regular formation. But there's a gap right here, and then if this is Russell 2K is the small cap stocks, they are sometimes known for being a volatile, but not in the same type of volatility level as SPX, which is why I like Russell 2000. You will get some movement, and if you don't have Russell as a ticker, RUT is the ticker that I have, but I don't see that on TradeStation. You probably have to go with IWM because that's the Russell 2000, I believe, ETF. All right. So we get gaps under here. This is dropping. This would be leg in, 2 on the base, leg out. That's how I would do that. And this is the gap down right here. So the sellers push that down. So I marked it on the daily, but the 15-minute breakout concept is the same for people who are trading that, and some of us do trade it. This will be the exact same concept. This has been a 15-minute breakout right here. And as I was saying before, it doesn't move like as wildly as SPX. The other thing I like about it is that it will make it move possibly before. So remember SPX, it was bouncing in and out, trying to figure out what it was going to do after that first 15 minutes. This is a clear breakout. So this is one where we will be looking to see. Whoops. Come on, data. I don't know if anybody knows, after a certain time, you don't even get to use the same day expiration on the sim in Thinkorswim. Sometimes mine will completely disappear. Anybody else had that problem? 48, so we'll go 50. So what am I looking for here? I am mainly just doing the same thing we've been doing, adding the volatility, implied volatility to the current price to get an idea of what my higher number would be, but also, so in this case, that is 2048. So I need to be outside of that, which would be about 2050. And then the other thing I'm looking for is making sure, since I'm doing a credit spread, make sure these two numbers, 1.4 minus 0.90, I want that to be less than $1 when I go to enter, if I'm doing it for the breakout. It's called the bid-ask spread. It's difficult to say that fast. Yes, Marshall, RUT is cash settled. That is the other reason why I like RUT. It is also cash settled. All right. So we'll see what happens with that. And this is what SPX is still doing on the 15-minute. So it hasn't really made any extra moves beyond what we saw earlier. So if you're trading that for the breakout, I would definitely keep an eye on it and see, because we have different things coming up. So anything could be the reason why it decides to go in a totally different direction. I'm gonna swing back around here and just see what there's been any updated news. So here's what we got. The majority of the stuff from this morning was mostly neutral, except for the non-farm ADP employment change for May. The S&P Global Composite PMI for May was good. Neutral were the other two for 945. There was the 3-star PMI Global Services was neutral, and then the non-manufacturing business activity was neutral. We had the ISM non-manufacturing employment for May was not good, but the new orders was good, and the non-manufacturing PMI was good. And by good, I'm just literally just saying green, that is green. But if you want to dig into the numbers, this is what was previously recorded or reported. This is what was forecast. And then this number is what actual. And so they literally just compare the numbers And the green usually will tell us whether or not it was good for the economy or bad for the economy. Because sometimes you'll see a number, it'll be lower, but it'll be calculation that's good. The number being lower is good. So it just depends on what you're looking at. So I'm actually glad they put that in there. But so yeah, as of right now, these are the numbers that we have, and then we have more information coming up pretty soon. So by noon today, we'll have more than enough information to at least have figured out what was happening, what it was trying to do, et cetera, et cetera. So as of right now, the Dow Jones Industrial Average is down 0.38%. S&P is up 0.23%. NASDAQ is up 0.74%. And Russell 2K is up 0.27%. The VIX, though, is down 0.08%. All right. Let us swing on over to our E2T Daily Declaration. By faith, I am a successful trader. I'm a wise and knowledgeable trader. I make smart and lucrative decisions for my portfolios. Money likes me because money is comfortable around me. It is drawn to me. E2T Daily Prayer. Lord, give us wisdom and knowledge for our trades today. Help us to make smart and lucrative decisions for our portfolios. All right, everybody. We still got a little bit more time with a few more 3-star, 2-star type events. So tread carefully. Head on the swivel. Keep up with your charts. And as always, stay green and get this money. We'll talk to you later. We'll either see you tonight or we'll see you on tomorrow's call. You all have a good one.